Well, welcome back to the Hot Seat. I'm delighted today to be joined by John Howarth here at Stationers' Hall in the City of London. Welcome, John.
Thank you very much, David.
So we've got our networking dinner here tonight. Are you looking forward to this evening's event?
I am very much, yeah. The last one I came to here was the one straight after lockdown because, as you know, 2020-21 was a complete washout. I think 2022 I came to the event here, or maybe the end of 2021. Very well attended, and looking forward to getting back into networking in the city.
Brilliant. So tell us a little bit more about your background and focus.
So I've been in wealth management now for, 37 years. The full range of 10 years in the UK and 27 years overseas. Whilst I was overseas, I got introduced to a company who were marketing private equity. So I started doing that as a sideshow with the traditional financial planning. But to be honest, I got more of an appetite for that then, and I was losing interest in the rest of the stuff, mutual funds and things. So, over a period of time, I started doing more and more private equity to the point where I thought, well, I don't really want to do financial planning now. So,
what kind of sector? Were you looking at investments just across the piece?
I joined a company called Falcon Capital, and they were doing everything at the time, from early stage seed investment, business plan, and close your eyes and hope we do okay, right the way through to full IPOs. We did the whole remit, and very, very successful period. After the global financial crisis, 2008, lots of the money switched over to Asia. It never really disappears, the money, when there's a crash, it just moves. So I built a big distribution region over there. And like I say, I just got more and more of an appetite, more exciting. I find it more exciting, more rewarding for clients.
Were the underlying investee companies UK or just global mix?
All over. I mean, the owner of that particular company was an American guy. So he used to get lots of deals, American deals and everything, some of which we're still holding big positions in. And then we started to do some deals over in Europe and also in Asia as well. Okay. So it was, and not really sector specific. The only sector we probably avoided from private equity perspective was property and deep tech and things like that, But the rest of it, we've had an open mind. Anything that we could invest in within the time frame that we like, which is 3-5 years maximum, to get a good return for ourselves and for our clients, obviously.
And you're down in the south of France now, so tell us about your setup down there.
Yeah, well, it's not really a setup as such. Yeah. I mean, I'd spent 3.5 years in Cyprus. That was last time I met you. Yeah. I think I was over there. It wasn't helped by COVID, obviously, for a year and a half. Were very, very strict lockdown rules and everything. Yeah. But it was very, very, when it did awaken again, I found it very, very difficult to do business there. So I decided time for a change. Yeah. And I was over in Monaco working there in 2008, just before the global financial crisis. So I had unfinished business there and decided to come back a little bit. I also wanted to be close to my family and everything. I've got a growing family and whatever. So the further away I was, Asia and Cyprus, now I've sort of moved over. So I came over to, I'm at the moment staying just outside Monaco in Villefranche. Yeah. 20 minutes away from Monaco, so I can be in there most days. And
what do you see of the Monaco market? I mean, I was down there a few weeks ago. I mean, it is a fantastic place, isn't it, for the private wealth sector? The clients that pass through there are top draw. The property market is going bananas, isn't it? I mean, what do you see? It is.
I mean, it literally has got every single thing. I mean, we've just had now the Grand Prix. Yeah. And then closely followed by an event called Top Marks Monaco, which you've probably heard about, is the world's best supercars, the world's best super yachts, and the world's best watches. You can imagine the kind of people that are there, and so obviously there's stacks of wealth there, but the downside to that is it does attract everybody. Everybody wants to go in there, and there's pitching events every single day of the week. Yeah. Sometimes 2 or 3, competing for the same day. And the fact that the people there have got lots of money doesn't mean they necessarily throw it at everything. They're very, very cautious. They've obviously got the money, successful business people, entrepreneurs, they're not lottery winners. Yeah. So they understand business a lot, and you've got to make sure that you're part of the community and they don't feel then they're being pitched at. If you can, and that's what I've been trying to do in the first 6 months I've been there, really. Get to as many events as I can, get your face known and everything, and people get comfortable with you then, and you build that trust, which is essential, obviously.
And do you work with intermediaries who could advise clients on these investments, or do you generally direct to the investor, or how do you?
It's a combination, really. I mean, in the past, I've always got lots of business from third parties, so accountants, lawyers, whatever. And interestingly enough, I mean, a lot of my clients have been accountants, lawyers, and private bankers, where you'd look and investment managers for large companies, because they sometimes feel that the same as they recommend diversification to their clients, they don't want all their assets, the pension fund, their stock option, their salary, everything in one institution. So, sometimes we get them to refer clients to us. Sometimes they become clients themselves. So, and obviously there's lots of just private investors there. So it's really a combination of the whole thing.
And what are you talking to clients about at the moment then? I know in Monaco you have a business partner. I mean, it'd be great to hear a little bit more about that.
Yeah, well, I moved over there in November last year, and within a month of me arriving, I was at a networking event and got introduced to Jean Zolotarev. Jean is the CEO. He has his own family office based in Geneva. He lives in Monaco, or just outside. And he also had this project, the Baltic Tech Ventures project. So he started to explain that to me, and I just found it very, very interesting. He created an SPV, a structure effectively, to market to the Baltic startup region. I knew where the Baltics was, but that was about it. I didn't really know too much about the environment and how good it was. And when we had a meeting, he was telling me that, I said, well, aren't startups very risky? Which is what I've always been preaching to people for the last 20 years or so. Dragon's Den kind of stuff, And when he explained that the survival rate with the startups that he's involved in is between 75 and 85%, I questioned him. I said, do you mean 75 or 85% fail? He said, no, they succeed. So he had my curiosity then, and we, over a couple of meetings.
What does he put that high rate down to?
Well, I mean, he ran the biggest investment bank in the region for about 11 years.
So he knows the landscape.
As a result of that, any deal that's going down in that region tends to come across his table at some point. So he's very well respected, very well regarded, very well connected in that region. He also owns the only English language speaking newspaper over there.
Right.
So he has a big, big presence there. And the reason that the companies succeed is because it's not just a question of throwing some money at the pot and closing your eyes and we're on the Big Dipper. He has a team of experts that are, that are there to assist these startups of about 200 people. And they're all over the world in many, many different sectors. So he wants to, before he'll actually get involved in a company, he wants to know what they're doing and how we can scale them. So we only get involved in companies that are post-revenue. So they've got to be making some money. It's not just a business plan on the back of a beer mat or something, So they've got to be making money, not profit, obviously. And then what we can do is, using the team of experts that we've got, is look at ways to scale the business and get them earning revenue and real revenue and make some profits.
And how do investors come into the opportunity? Is it a fund owning positions in different stakes, or do people come deal by deal, or how do investors sort of?
Well, Jean created a special purpose vehicle, SPV, which is Baltic Tech Ventures. We've got 17 companies in that portfolio at the moment. His plan now is he wants to increase that over the next 3 years to probably 65, 75 companies. He's already got the companies there. There's dozens of companies coming through. He's already done due diligence on another 20 companies. So what he wants to do is we've created a convertible loan note. So we're taking money in from clients. We give them a double-digit coupon so they can earn 29% over 3 years. And then they can observe the process. But the convertible bit means they can convert to equity in the mothership at any point they want during that 3 years at a discount. So the idea behind that is purely and simply that, it's been a difficult time for markets in the last 12 months, let's say, particularly 9 months. And people are a bit hesitant about maybe dipping their toe into a market that they're not familiar with, and it has the word startup in there, and venture. So what we're doing is saying, well, you can take your dividend and you can have a look. They would then be invited. So every time we have a company...
Is it all euro denominated as well? I mean, currency-wise, there's not an
euro denominated. All these companies are there. So as we're bringing companies into the portfolio, into the fold, we'll be having a pitching event. So we can invite the investors in the mothership then to have a look and decide. If they then like a particular company or a particular project, they're free to co-invest. So they can come to us and say, right, we like that, and we will agree some terms, and they can come in on similar terms to what we will. So they can dip their toe into the actual owning the equity of the things, or they can just take the dividend and, you know, and ride that out for 3 years. And you know, so it's giving people what I think is the best of both worlds. So they can, if they're fairly new to that particular market, new to the Baltics or new to the startup scenario, they can observe, they can look, they can learn. And at any point they want to come in, they can do that. So.
And there's value there because of Gene's network knowledge, insight into a market that's not overbroked and needs finance to scale.
Exactly. Yeah. I mean, you know, through his contacts, we have a unique edge and opportunity there, you know, where we get the best deals, we get to look at the best deals, we get very, very good valuations on the deals, which all adds value for the client, you know. So it's just a very, very smooth operation. And you know, all the team of experts, they're all in it for the same reasons as myself. You know, they believe in exactly what Gene's doing. I mean, Gene teaches entrepreneurship and venture capital at Monaco University. So he's very, very well regarded. He's just been over to Istanbul, where he was asked to come over as a judge for the Shark Tank, is it called, or something?
Oh, right, okay.
Yeah. So, you know,
he's got some kudos as an entrepreneur.
Exactly. Yeah, he's very, very well regarded, well respected. And whenever I mention his name in Monaco in particular, everybody's heard of him.
And what's the typical kind of ticket size for an investor? I mean, what's either a minimum or a typical? Give us a flavour for
the average is the average is about €100,000. Yeah. We can take investments in the convertible loan notes at half that. We can take up to 50,000, and the maximum we want normally is €1 million on there. So with the convertible loan note, we're looking to raise about €15 million. And that will be used immediately into acquiring more companies and building the portfolio of companies. So we've got the companies lined up.
But meeting that coupon is based on success in the portfolio, or if you're paying a double-digit coupon to investors coming in, that's being generated.
Well, yeah, we've got there's obviously profitable companies already within the portfolio. Yeah. You know, so there's many ways, and you know, like I say, I think it's a very, very good thing. For me, it was refreshing because it's a complete new market for me.
Yeah.
And it was a bit alien to me where he was identifying, it's called Bridge to Round A.
Yeah.
Bridge to A, Series A. That's the particular niche. And I was saying, well, you know, after A, in the past, I've always done then funding rounds B, then C, then pre-IPO, and then IPO, and seen the thing all the way through. So a couple of unicorns, in fact, you know, companies over $1 million. So, but he sees a niche in this particular sector. He doesn't want to go there. You know, he can make 3 to 5 times his capital in 2 to 3 years, and everybody's happy. You know, so and then somebody else can come in because there's a dearth of cash. There's stacks of cash waiting to. They don't want to come in at the venture capital stage, but they're quite happy to come in once it's got beyond Series A. As you know, the big investment banks will. They only invest when the risk is gone.
Sure.
No, I'm being flippant, but. You know, the less the rate. Once they've gone beyond Bridge A, it's like everybody takes a deep breath and says, this company is probably going to succeed. And then there's dearths of cash, there's wedges of cash, you know, available to come in. We've already had offers from several institutions, small boutique investment banks, funds, etc. Right, we want this now. You know, we want to buy you out now. But that's not the idea. You know, we've only just started on the journey. So 2 to 3 years is the optimum time. And then we think we'd either be able to sell that portfolio on to a fund or an investment bank or whatever, a family office, a big family office, I don't know. So there's several options there. And
exciting times ahead.
Yeah, I think so, yeah.
Well, thank you for talking to me today, John, and we look forward to sharing this interview.
Thank you very much, David.